Vets may be overcharging pet owners, regulator says. As if this is some new thing. The competition watchdog plans to investigate the sector after identifying problems in an initial review. It's very soft language, isn't it? Nice picture there. Dinky doggy. The competition regulator plans to launch a formal investigation into the veterinary market after initial review found multiple concerns. The Competition Markets Authority said pet owners may be overpaying for medicines and not being given enough information about treatments. Sarah Cardell, Chief Executive, said, "Our review has identified multiple concerns with the market that we think should be investigated further. Given these strong indications of potential concern, it's time to put our work on a formal footing. We have provisionally decided to launch a market investigation because that's the quickest route to enable us to take direct action if needed." The regulator revealed on Tuesday morning that its initial review of the £2 billion market, which started in September, had prompted more than 56,000 responses from the public and vet industry. This is a critical market for the UK's 16 million pet owners, Cardell said. The unprecedented response we received from the public and veterinary professionals shows the strength of feelings on this issue is high and why we were right to look into this. So, yeah, that's it. Anyway, no, should we have a look at what they said? The regulator said concentrated local markets, in part driven by private equity groups, buying independent practices, may be leading to weak competition. So this is price gouging, isn't it? People have just like bought up pet related companies, vets, and just overcharging. Large corporate groups may have incentives to act in ways that reduce choice and weaken competition. That sounds like cartel behavior. Owners may not be given enough information to enable them to choose the best veterinary practice or the right treatment for their needs. So they are being deceived. And why would they not be doing this with human beings when it comes to private health? Shares in the vet chain CVS Group and the retailer Pets at Home, two of the biggest 6 vet groups, have fallen since the CMA began its review, which followed concerns about customers facing above inflation increases in bills and rapid consolidation in the industry. CVS shares dropped 21% or 304p to £11.53. That's huge in early trading, and Pets at Home fell 1.4%. So that's nothing. 3 pence. So CVS have taken a real hit. How many more? Yes, so yeah, there's quite a few more paragraphs, and they're even asking people to comment. The veterinary market has been transformed in recent years by consolidation, with independent practices being taken over by private equity groups. This is so much like what they have with childcare and with elderly care. It's all private equity. Independent practices have been taken over by private equity groups and others. Small practices accounted for 89% of the veterinary industry in 2013, a figure that had fallen to 45% by 2021. So there are no independent operators, basically. They've gone from, as in huge change, from 89% to 45%. The potential market investigation also comes at a time of increased pet ownership since the pandemic lockdowns, as well as pressures on vet surgeons and nurses. The CMA has launched a 4-week consultation on whether to formally launch a market investigation. Anna Judson, president of the British Veterinary Association, which represents about 19,000 vets and vet students, said rising prices are a concern for everyone, but it's vital to recognise there is no NHS for pets. Whether they are employed by corporate or independently owned practices, vets deliver highly specialised, tailored care for the UK's pets, and the cost is a fair reflection of investment in medical equipment, supplies and medicines, and the time vet teams dedicate to the care of each patient. So that sounds like the British Veterinary Association are saying, okay, yeah, no, we get that you're worried about prices, but you know what? You're not overpaying because there is no government regulation or government spending on this. It's completely private, and therefore the whole industry is private and it costs money. So kind of like, sorry, you'll just have to suck it up. Well, there you go. Let's go back to this. Private equity's pet problems are a harbinger of things to come. Okay, yeah, so this is the same story actually, isn't it? The sector is, here we go. Private, Another dinky picture of a nice cat. 16 million pet owners. So this is 6 minutes ago. As private equity squats across ever greater swathes of the business world, the lines between itself and traditional enterprise are blurring. Witness, for instance, its expansion into asset classes such as real estate, infrastructure, and private credit, or the push to offer products to retail clients. Now the sector sports a new, less desirable badge of corporate normalcy, the attention of antitrust regulators. The UK's Competition and Markets Authority plans to launch an investigation into the domestic pet care market. In the past 10 years, 6 major groups, 3 of which are private equity owned, have bought 1,500 vet surgeries. That brings the share of such facilities owned by IVC Evidensia, owned by EQT and Silver Lake, Pets at Home, CVS, BC Partners, Vet Partners, CVC's Medivet, and Linnaeus, to almost 60% of the total. CVS shares lost about a quarter of their value on Tuesday, as reported in the other story. While the CMA is focusing on the whole market rather than on private equity firms specifically, the sector is attracting increasing regulatory attention. In the US, Federal Trade Commission Chair Lena Khan has private equity acquisition strategies in her sights. But that is obviously for communication, I think. Federal Trade Commission, I think that's mainly telecoms, but maybe it is antitrust in general. In September, the FTC sued US Anesthesia Partners, the dominant provider of anesthesia services in Texas. Okay, I stand corrected. It's not communication, that's medicine. And its private equity owner, Welsh, Carson, Anderson and Stowe. The UK veterinary sector has become more concentrated. There you go. So small chains are 40%, but look how much the big chains take up if you add them all up. Regulators are getting wise to roll-up strategies, whereby firms acquire a platform company and then use this to hoover up rivals. Roll-up strategies. Rather like traditional strategic M&A, the idea of this strategy is to gain scale, improve margins, and lift valuation multiples. Taken individually, transactions may not warrant regulatory scrutiny, but the overall effect on the market can be significant. Pet care has been an attractive hunting ground for private equity. In the UK alone, there are 16 million pet owners increasingly keen to give their furry companions the best that money can buy. Supply is local, and prior to the buying spree, fragmented. There are other industries that fit the bill, particularly in the healthcare sector. That's what I'm saying, NHS. The CMA itself has recently called in transactions involving private equity-owned dentistry companies. Okay. Roll-ups are big business for private equity, accounting for some 70% of deals in 2023, according to PitchBook, up from 54% in 2014. It's not hard to see why the high cost of debt has torn up the industry's traditional playbook, which focused on leverage to juice up returns. To make the sort of money their investors expect, firms now need to show a real improvement in their portfolio companies' operations. That means an increasing focus on M&A and the accompanying attention of the world's competition watchdogs. Okay, so they actually have to buy real businesses, and they actually have to make the businesses work in some way. And the best way to do that is obviously to just reduce competition and overcharge, so that customers in general don't have much of a choice. Here's the original story from an hour ago. UK competition plans probe into veterinary market. Competition Markets Authority is concerned pet owners may be overpaying for treatment. UK competition watchdog plans to launch an investigation into the veterinary market, warning that an industry that has consolidated rapidly over the past decade may be short-changing millions of pet owners. Announcing the plan on Tuesday, the CMA said 16 million pet owners may be overpaying. It's amazing how similar all the stories are. 45,000 members of the public responded. Yeah, so there you go.